Hi everybody, welcome to another session of Come Learn With Me. My name is Vatel. Today's article, Home Sales Plunge, Investors Pull Back Too. Prices drop 8.4% in 4 months. Active listings and price cuts rise further. Let's get started. Sellers are struggling with denial. Priced right, a home will sell, but right is where the buyers are, and they're a lot lower. Sales of all types of previously owned homes, houses, condos, and co-ops fell by 5.9% in October from September, the ninth month in a row of declines, to a seasonally adjusted annual rate of sales of 4.43 million homes, just a hair above the lockdown month of April 2020, according to the National Association of Realtors. Compared to the recent free money peak in October 2020, sales were down 34%. Year-over-year, sales fell by 28%, the 15th month in a row of year-over-year declines. Beyond April and May 2020, this was the lowest rate of sales since December 2011. Here's a graph to show all the information we just read. Sale of single-family houses plunged by 6.4% in October from September and by 28% year-over-year to a seasonally adjusted annual rate of 3.95 million houses. Sales of condos and co-ops fell by 2.0% in October from September and by 30% year-over-year to a 480,000 seasonally adjusted annual rate. Investors and second home buyers purchased 16% of homes in October, down from the 17 to 22% range in the spring and winter. In other words, their purchases plunged to an even higher rate than the purchase of regular buyers, as investors too are losing interest in buying at these prices. This plunge in sales is a sign of potential sellers and buyers are in a standoff. Many potential sellers refuse to accept reality and lower their prices to where sellers are. Instead, they're thinking, and this too shall pass. And they're hoping or praying for a Fed pivot or for a miracle or whatever. And don't even put their homes on the market or pull it off the market after not getting any traffic of the aspirational asking price. And buyers have lost interest at the current prices. Homes that are priced right, meaning priced down where buyers are selling, but sellers don't like to go there, and we see that in the active listing too. But there is much price cutting going on, as more sellers figure this out. Price reductions. In October, the number of homes listed with price reductions rose to 327,184 homes, the highest since October 2019, and just a tad below it. Here's a graph to describe that. But the proportions of active listings with prices reductions has exceeded 40% for the past 5 months, by far the highest in the data that Realtor.com makes available, which goes back to 2016. And here's a graph describing that as well. The median price of all types of homes whose sales close in October fell for the 4th month in a row and is now down 8.4% from the peak in June. This whittled down the year-over-year gain further to a 6.6%, down from 8.0% in September, and down from year-over-year gains in the 20% to 25% range at peak frenzy last year. Including any seasonality, it's only responsible for a portion of the price drop, and the rest of the price drop is some sellers getting more realistic. Here's the graph to describe that. Active listings, total investors for sale minus the properties with pending sales, rose to 754,000 homes in October, up by 33% from a year ago, and the highest since August 2020. They remain relatively low. Other signs that potential sellers are still hoping for a Fed pivot or a miracle and don't put their vacant homes on the market or put it off the market after a short while. Another graph to describe that. Day supply of total inventory increased to 3.3 months of sales, the highest since June 2020. Sales by region. Sales plunge in all regions, but plunge by most in the West. Northeast, negative 6.6% mom to negative 23.3 yoi. Midwest, negative 5.3 mom to negative 25.5 yoi. South, negative 4.8 mom to negative 27.2 yoi. West, negative 9.1 mom to negative 37.5 yoi. As mortgage rates jump to normalish range of the pre-money printing era. And here's a graph to describe that. And that's the end of our session. If you enjoyed this, please like and subscribe and check out our links below to see how we can help your business. Have a good day.